I'm Greg Brown for Newsmax TV Money. Joining me today is David Frazier, the editor of the ETF Strategist newsletter. We're going to be talking about the markets and what's going on in the news. David, we're down a few hundred points. It's pretty crazy out there. What's going on?
Well, the market's finally reacting to something that we learned as children, and that is when the lamb cries wolf too many times, the game's over. Essentially what's going on here today, as many people know, the government via the Fed has come in and essentially bailed out now AIG, American International Group, the nation's largest insurer, by providing $85 billion in loans to that organization for the next 2 years. Investors basically have lost faith in the government. They're concerned about the credit markets and how clogged up they really are and how wide this could spread.
This could be a pretty significant problem. Do you think it's going to last for weeks or months or into next year?
The problem in what?
In terms of prices of stocks dropping, people running away, credit being tight, the general economy. Where do you see in the medium term, and then later tell me about a bit of the long term in your viewpoint?
Sure. The problem is that all of this mess was caused by the nonsense subprime loans that were made to people who wanted to buy homes that they couldn't afford. The housing market's been on a slump for about 2 years now. It's probably going to remain in a slump for another 18 months. The housing market really drives a lot of the economy. It employs a lot of people, persons in jobs related to the housing market and banking and both commercial banking, mortgage banking, investment banking, very related to the housing market. So the real problem is that the economy has been slowing for many months now, and unfortunately the government keeps jumping in and trying to put a Band-Aid on the problem. It hasn't worked, and it's not going to work. All that the government is doing is prolonging the slowdown. Now, as far as stock prices are concerned, I don't see stocks going up anytime soon. That is, trending higher for a period of time. The path of least resistance for stocks has been down for at least a year now. But here comes the government. They save things. Here comes the government again. Puts on another Band-Aid. And untrained or unsophisticated investors, when that happens, I think all the problems are going to be solved, and you usually see stock prices rebound for a few days or at best for a few weeks. But no, stock prices, it was already a given that stock prices were likely going to trend lower. Now, the major thing to look at really is the fact that stocks have broken down through some major price support levels. Now, a lot of folks will listen to that and say, well, that doesn't mean anything. That's some technical barometer. What it is it's like an X-ray. Medical doctors give X-rays all the time to try to determine the health of a patient, what a problem may be. What we're seeing in the way that stocks have broken down through these support levels is essentially saying people have now lost faith. Okay? So my thinking is stocks are probably going to trend significantly lower from here. Now, you said, a problem. Well, it depends on whether you're prepared or not. The real problem for me and how I make recommendations to subscribers to my investment newsletter, the ETF Strategist, the only really problematic time is when you have a sideways market. It's difficult to make money in that type of a market. So for me personally and for our subscribers, we'll actually benefit substantially from this, more than likely, because we'll go short the market.
Talk briefly about a couple of the holdings. I know that you've been making some investment recommendations recently precisely for this market, if you can.
Well, we actually have very few recommended holdings at this time. The reason being is we run through recommendations to portfolios, an aggressive portfolio and a conservative portfolio. The conservative portfolio, its objective really is to see to it or to help investors to not lose money, okay? To always maintain their initial capital and to outperform the markets at the same time in both an up and a down market. We currently only have one equity holding that we're recommending for that portfolio. It's a medical device fund. It's held up very, very well in this market, and when I say it's held up, it's actually up about 7% since I first recommended it last March, I think it was, this past March. And that's about 30% of the portfolio. And the rest of the portfolio, we're in cash. The reason being is because there's just too much risk out there.
Talk to me about the aggressive portfolio.
The aggressive portfolio, we also have recommended that same position, that medical device fund, and we've also have about 30% recommended allocation to cash and about 25% recommendation for an inverse consumer goods fund. That fund is up about $6 today, doing very, very well. Just looking a bit ahead here, by the end of the day, those recommendations on average will be up about 13–14% since we started this service last September. And the S&P 500 looks like it's probably going to be down about 16 or 17% by the end of the day.
All right, well, we'll talk more soon, I'm sure. This has been Greg Brown for Newsmax TV Money with David Frazier, editor of the ETF Strategist.